Hello, hello, hello. This is testing 1 2 3. This is Monty. It's been a while since I've made a podcast. So how you guys doing? And welcome back. And we have a few things to cover. As usual, I'm doing my 5 mile walk, and I'm going to be covering a number of different things while I'm walking, for a while at least. So to get right into it. Right now, I'm hearing more and more about the idea that we could be in a crypto winter. Now, this crypto winter terminology basically is taken from traditional markets. A lot of times in traditional markets, we have concepts and ideas that are used in those markets. And because the crypto markets are indeed, gaining enough size, and the macro events are spilling over, nonetheless, into the crypto-related industry as well. So there are going to be a few concepts and ideas and strategies that are going to permeate both. So we're going to have to get used to the idea that macro events are going to be our concern in crypto markets or industry, just like they are in traditional. Of course, at the top of the list is probably going to be situations involving Russia, India, things that are going on with, you name it. China is still somewhat relevant, even though to a large extent, China is minimizing their role in terms of how it directly affects crypto. But the bad news is they still have a significant amount of influence on the macro level. And of course, we should pay attention to what's going on there as well. Now, there are some very specific things that I want to highlight. I'm noticing in the Bitcoin mining industry, for instance, there was a great deal of activity revolving around acquisition of mining machines. It was very, very active and prevalent to a large extent amongst a number of different miners. Constantly acquiring large numbers of machines. I'm starting to see a bit of a slowdown, and I think I read something about the fact that because miners, they have a need for to maintain cash flows, and that they have business expenses that need to be funded. So at one time they sold Bitcoin to a large extent to fund their operations, and then all of a sudden a few miners experimented with the capital markets, and they went into the capital markets, and then they did the equity thing and sold stock and raised money that way, and that funded operations to a large extent. But then after so long, after so much of that, I'm starting to see a little bit of a slowdown, mainly because of the sell-offs that we're seeing in traditional markets, which again plays into the idea that we're no longer isolated totally from what's happening in equities markets. Particularly the technology sector there's a heavy degree of correlation with the tech sector, and how Bitcoin and cryptocurrencies are viewed as far as technology plays. So what happens in the traditional markets in terms of how people view technology and such, that spills over, right, into, for instance, the mining sector. The mining sector, they're not raising as much capital through the equity markets right now. Seems to be a slowdown. And believe it or not, a number of miners are also now seeing that they're selling Bitcoin again to fund those operations. I think mining is very capital intensive, so unfortunately you can't go on forever expending a great deal of energy on your electric bills and such without funding that. So that funding again was done by selling Bitcoin initially, and then the capital raises that worked out very well, but now it's starting to slow down. So what do you do? The only thing left to do after that is to sell some Bitcoin, which is what we've been seeing. So unfortunately, that's put a little bit of selling pressure on Bitcoin, and as far as price wise. So we're starting to see a little bit of that as well. The good news is the short term and the long term hodlers have been sticking to the game plan and not panicking. So we've seen Bitcoin stay in cold storage, and for 1-2 year periods, for instance, been looking pretty good. So people have learned their lesson in the crypto industry, particularly the Bitcoiners, in terms of holding on and what it means to wait out these cycles. So that's the good news. Now, the bad news is because there was a great deal of euphoria around the escalating prices up until the latest slowdown, that we still have a lot of froth in the markets. There are some very, very wealthy individuals who did very well. So they are able to, provide a little bit of alternatives for they're still providing alternatives for those people who want to dabble in those projects that don't really have a whole lot of merit. Eventually, what's going to happen is this current slowdown is going to start to eat into the profitability, or not even profitability, because a lot of those new projects they're not even profitable. They just have a whole lot of hype associated with them. But at some point, that's going to run out, and we're going to see a shakeout. Now, before we get to the shakeout, let's take a look at mergers and acquisitions and Wall Street's involvement. Now, we just came off of a very, very interesting period in 2021. There was at least $30 billion that was that entered the crypto industry overall, and that's more than most years combined. So that $30 billion has funded a lot of projects. We're going to see, to a large extent, whether or not those projects overall, which ones are going to be sustainable and which ones aren't. So there's going to be some consolidation, definitely. I'm expecting Wall Street to stay committed, to stay involved for the most part. But there's going to be some shakeouts. But I think Wall Street likes the idea that we're showing resiliency. In other words, when you have large sell-offs like we've had without a whole lot of panicking, that's good news. The blockchain, the network itself, has been very resilient. The blockchain itself is showing to be very secure, very stable and reliable, which is good. That's reassuring a lot of the major players, even despite that we don't have major regulatory approval to the extent that we need to, or that we want to, or whatever, or that we're going to get, but like it or not. It's going to be part of the ecosystem as far as regulations and such. But anyway, Wall Street players are feeling more comfortable with the resiliency of our network. So once we see the shakeout and get rid of the froth, then we're going to see more of a focus on value, our blue chip, so to speak. And then you're going to see consolidation, and then you're going to see the upward trajectory start up again. That could take 6 months, 12 months. Okay, so in the meantime, expect to see more of an emphasis placed up on quality projects, real leaders, real use cases and such. So be careful which side of the table you're on. Now, the major players are going to be doing the acquisitions and the mergers and such. So probably look out, keep a eye on the Brian Armstrongs from Coinbase, the Sam Bankman-Frieds of FTX, Jesse Powell's from the Kraken. Certain individuals like that are going to be on the prowl, like a Novogratz and such. Those guys are well-funded, have a whole lot of capital to work with, and they're going to be looking to acquire exchanges, for instance. And so there's way too many exchanges, It's going to be massive consolidation as far as exchange is concerned. And you're going to see a merging of the stocks trading outfits versus the crypto exchanges. At some point, it will be totally indistinguishable in terms of what a traditional stock trading company looks like versus a Coinbase, who's also going to be trading stocks and equities and such as well at some point. So the 24-hour trading in crypto is going to extend itself at some point to incorporate stocks into the mix, and maybe we'll even see a hybrid that looks like a stock, acts like a stock, but maybe it'll be crypto or crypto-backed or something like that. So expect to see some new products, emerging of products, and it's going to be very exciting and very interesting going forward. Now, some other things that I like is going to be the privacy focus. Implementations of privacy are just barely getting started. The CBDCs are going to, at some point, roll out. We'll be able to work with them, use them, have wallets with them in it, and we'll do a side-by-side comparison, of course. And the general population is going to get a chance to compare the characteristics of CBDCs versus cryptocurrencies. And I think most people it's going to be a hands down, bias towards cryptos, of course, because of the peer-to-peer nature and the decentralized and the censorship-resistant nature of Bitcoin and cryptocurrencies in general, with Bitcoin, of course, at the top of the list. And I think the CBDCs, they're from a product standpoint, it's not going to be able to compare at all favorably. So that's when the war really going to break out, because the central bankers and such are going to do their best to make one last desperate grasp at getting the mind share of people to buy their product, use their product, and buy into the idea that the CBDCs are the way to go. But as far as I can tell, they're not competitive, they're not comparable, and that'll be one of the final battlefronts that are going to be major. There'll be smaller ones after that, but that's the major one when the CBDCs roll out. The United States is probably going to take a look at some sort of partnership with stablecoins, incorporating the characteristics of stablecoins into CBDCs until the Federal Reserve decides whether or not stablecoins actually have a part to play or not. But over the short term, I think stablecoins are structurally important to the ecosystem, and CBDCs are going to have to exist alongside the stablecoins. It's going to be interesting to see the role of commercial banks, at least as far as how they factor into their role in a world with CBDCs being able to micromanage and have where we have direct accounts with the central bankers and such using CBDCs. There's going to be some competitive things going on with the commercial banks and CBDCs. So that's going to be interesting to see how that works out. I think the commercial banks have a very important role to play as far as credit, and I don't know how the CBDCs are going to handle that. I don't know how the CBDCs are going to work with security and such. Cyber attacks are going to be a major problem. Scammers or fraudsters are already taking advantage of CBDCs, the ECNY in China. There's been a number of scams that have gone on where accounts have been compromised already. So that's going to be a problem. Whoever thought that scammers wouldn't be able to play a role with the CBDCs, just fooling themselves. That's going to be an issue regardless, and there's nothing that can be done about it. Okay, so get used to that, hearing more and more about scams and frauds in relation to CBDCs when they roll out. That's one of the things that the Federal Reserve is hesitating about. So now on the inflation front, way back when I've been saying that we're going to experience inflation, very high inflation, which we are. That's going to turn into a type of hyperinflation. And then what's going to happen is a lot of people in the traditional markets, the equities and real estate and such, they're going to there's going to be a lot of capital that's going to exit those markets and go into cash. And cash doesn't give you any decent return because the excessive money printing is going to be a melting ice cube in the hands of those people who fled to cash, trying to avoid inflation. And once the people get tired of losing their returns or losing value because they're in cash, and gold is not offering a good alternative at this point as far as keeping you ahead of inflation. So that money is going to finally start to make its way into cryptos, and particularly Bitcoin, because the banks, through NYDIG and custodial services providers and such, they're going to be offering a lifeboat to people who want to get out of cash and get into cryptos. And because of the limited nature, the limited supply of Bitcoin, the supply shock is going to finally start to kick in. Remember, the demand hasn't been there, but the supply is very limited right now. 19 million, 18 million, 19 million Bitcoins are spoken for. A couple of million still outstanding, give or take. That's going to go very fast, particularly with any supply shock. We're going to have a vicious cycle where people think and hear that there's going to be limited Bitcoin, and then at some point that prophecy will be self-fulfilling, and people will literally scare themselves into making the supply shock a reality. And then you'll see, I think, the upward trajectory in the price that a lot of us have been looking forward to. So expect for that, but plan accordingly, because this is going to drag out a little bit longer, because we're entering some critical stages of the battle. And right now, the transition is going on where we see meltdowns in traditional markets. A little bit of sector rotation is going to take place and absorb some of the stress and strains and some of the pressures with sector rotations into defensive plays in stocks and defensive plays into other strategies, tips, or whatever. That's not going to be satisfying for the most part for a lot of people, but it will absorb some of the pressure in those markets. But for the most part, people are going to need return. They're going to need appreciation. They're going to keep ahead of inflation. Some of the deflationary tendencies are going to be revolving around getting away from petroleum over the medium to long term. The EV vehicle sales are doing very well. We're seeing exponential growth as compared to ICE sales. Internal combustion engine sales are declining. More automobile companies are trying to consider what it looks like to spin off, like Ford is considering spinning off the EV division as compared to ICE. So if they float the EV operations and do a public IPO or something like that, that's going to allow investors to value that differently, right? So we're going to see that as a trend, I think, going forward, where you separate out your EV operations and such, and you try to discard as much as possible anything related to that which is using petroleum, gas, and oil. So those are the trends that I see that's going to be a deflationary effect on markets. So that will be such that the as far as the things that cause have a deflationary tendency, along with, of course, more technologies that allow us to do more, better, quicker. That's going to play out over the medium to long term as well. So expect technologies that have a deflationary tendency, work at home situations, and less traveling. Business travel is pretty much dead. So those are some of the trends that I see without going into too much detail. I have a lot of this on my website, by the way. On the housing sector, we're seeing major players. We're seeing Invitation Homes, American Homes for Rent. I think there's a company called Progressive Rentals. There's a number of Wall Street titans Blackstone, for instance. A lot of these companies are buying up all the housing, turning them into rentals. First-time home buyers are going to be forced to rent because the prices are out of control. I'm thinking that there's going to be a shakeout, but you got to remember, when these well-capitalized players get into these markets, and when they become so large, they're able to play this out over a long period of time in terms of their ability to sustain the type of their involvement in those markets. Even though we should be seeing a shakeout, they're more capitalized, more well-capitalized, and so they can last a little bit longer. Smaller players in those markets, you got to be careful, because if you can't sustain a long, protracted period where you're subsidizing your rent or whatever, then you're going to be in trouble. So, take a look at real estate if you can. Go to my website, just type in housing or something, and you'll see all the goings on in real estate. There's a lot of things happening with commercial on the commercial end, where they're converting this building into into residential, or gyms are being incorporated into shopping malls, and you name it. People are thinking of all kind of creative uses for the extra commercial space that's not being utilized by employees when they not going to work. So that's going to be a situation that's going to be interesting in terms of how do you take advantage of converting commercial space into multi-use or some other use that's more productive, simply because there's no need if I can just work at home. Also, in the real estate sector, I think creative brokers and creative salespeople in real estate, take a look at what it means to have housing more suitable for work at home, housing more suitable for plugging in electric vehicles, housing more suitable to working with the grid through Bitcoin mining or something like that. Alternative energy production, like Bitcoin miners, and all that's going to be very interesting going forward. So keep that in mind. Your utility companies and microgrids and all these things are going to be part of what you want to look at as well. When you're moving and looking at houses and such. What does the utility grid infrastructure look like? What does the house look like as far as its own infrastructure, allowing you to work at home, allowing you to charge your electric vehicle and stuff like that. So anyway, I'm getting into an area, I think, where the signal is getting weaker. And anyway, we covered a lot of ground, but last I mentioned, I have a lot of information on my website on just about everything that I'm covering, and I haven't covered not even 5 or 10% of what I want to cover. But anyway, a lot of interesting things going on. So stay abreast, stay tuned, and stay safe.